Hey everybody, Bush, this is BK Force. Welcome to the weekly technicals for the Aussie complex for September 11 to September 15 of 2007. So I think the most surprising part about Aussie, and perhaps not so much so because last week I wasn't bullish on Aussie, which I should have been, but I wasn't bearish. I was very, very cautious about not being bearish. And the reason why is because I saw this formation on the weekly where we were bottoming out and looking really sort of much more well bid than we were well offered. And that's one of the reasons why I was definitely not bearish, which was at least halfway right on a trade. I think this week, of course, the big breakout through the 80s was a big surprise. But even though we did break out through the 80s, because obviously of carry trade flows and the fact that the U.S. yields now are very close to 2%, and the RBA is essentially staying stationary without moving anywhere down on the accommodation scale, we're still facing this incredibly important resist point here at around 81. What is this? This is 81.6, 81.50 basically. Let's say 81.50, 8200. That zone still represents a critical resistance point, and certainly sets us up potentially if there's any kind of a dollar rally trade, especially in a trade in a rally in dollar yields, for a clear double top formation. So to me, the risk here probably is to the short side, which means the opportunity here is to the short side. And given the fact that we're so close to basically 100 points away from the top, I would prefer to be actually a scale-up seller here against this double top formation, than try to do the breakout against the 81s. If it does clear the 81.50s, then yes, there is nothing here to stop us until 85. It creates a completely different dynamic. And it suggests that the dollar woes are much longer, much deeper than anybody can imagine. Certainly on a longer-term basis, you can see that the Aussie is in a very strong bottoming formation. It's not out of the realm of possibility that we could break out above this 82 level. But until and unless we do, you sort of have to operate on the assumption that this is the terminal top, and there's a chance here for a double top formation around this area. Now, Aussie itself, while positive, let's take a look at the rest of the complex with Aussie yen. Trading choppy to the downside. Again, here, if yen recovers, we may have this particular formation, while looking mildly negative, could very quickly turn wildly bullish if we can hold the lows over here, because a breakout back above here would suggest a higher low and a move all the way up to potentially 90. So as a reversal trade here, this, one of my trades was pound yen on the upside. Aussie yen would probably be my second call to the upside. Odd CAD, when you're looking at the Antipodeans, was a trade that I thought might make its way back to parity, and boy was I wrong. The Canadian strength here just completely overwhelmed it. But having said this, though, notice something very interesting. The CAD essentially bottomed out at this 96.50 level for all intents and purposes. A big spike low. This is the weekly chart. And if you believe that the Canadian dollar has kind of exhausted its move for the time being, and of course we'll be watching because I think oil gets perhaps more downside action down to 45. This is an interesting reversal candle. I kind of digging this candle to the upside on a very low volatility trade with the potential maybe 50, 60 points to the upside. You have a very clearly defined risk here at the 96.50 level, effectively 96.60 level or so. You have a clear buy-up of the value proposition. We do have Australian employment data, of course. If that proves to be supportive, that only makes the trade even better. If it doesn't, then you probably could have a retest of the bottom over here. But as a flip trade, I kind of like the Aussie CAD here to the downside. Last but not least, Aussie Kiwi, looking very strong here. Really, this has been just a monster rally. Again, one that I really haven't paid as much attention to as I should have. We took out the 110s, big breakout, consolidation here. Tempting as it is to short this, though, it's not the time yet. The true short area is above 1200, so there's more extension here. You actually could probably make a very legitimate case here that this is a decent trade up, and if you are bullish Australian employment, this certainly looks like a trade that could go to 1200 as the week progresses.